back to the Forex Lounge Fundamental Extras. Today is Wednesday, April 14, 2010. Welcome back, one and all. Great you could join us today. Bloomberg.com reports the cost of living in the U.S. rose in March while prices excluding food and energy were unexpectedly unchanged, indicating tame inflation is accompanying the economic recovery. The 0.1% gain in the consumer price index was in line with forecasts and followed no change in February, the Labor Department reported today in Washington. Excluding food and fuel, the so-called core rate held steady after a rising 0.1% in February, reflecting cheaper rents and clothing. Getting to the charts now to see how this reflects to our trades. We see the blue line is the U.S. Consumer Price Index reported this month at 0.1%, the previous month at 0.2%. Now the violet line represents a 12-month average. We can see over time the CPI will oscillate roughly between the zero, sometimes negative a few points, to positive half a point, sometimes positive a few points. At the moment, the CPI is moving to the downside. And notice a correlation between the CPI. This time the U.S. CPI is the violet line, while the blue line is the Dow Jones Industrial Average. During times of economic prosperity, when the Dow Jones Industrial Average moves higher, the CPI tends to move up as well. During times when we're in a recession, as of late, the CPI declines, so does the Dow Jones Industrial Average. And then finally, we take a look at the correlation between the CPI, that's the blue line, the Consumer Price Index, and the violet line is the FOMC, the Federal Open Market Committee. Those are U.S. interest rates, currently just about at zero. During times of economic prosperity, when the stock market is strong, the Federal Reserve will raise interest rates, and they'll raise interest rates to combat the risk of inflation, which is indicated through the CPI. However, during times of recession, as the Federal Reserve has to cut interest rates, the CPI naturally does go down because prices do get cheaper. So over time, we can see during times of economic prosperity, the Consumer Price Index, the CPI, will rise, the Federal Reserve will raise interest rates, and in turn, that expectation of higher rates can cause us to see the dollar rise. With that said, if you have any questions, do not hesitate. Email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.